Hello, thanks for joining me again. This is the ASX and sectors weekly chart analysis for the week ending 25th of June 2022. The first chart is the XJO, the S&P ASX 200 index, and you can see price made a modest response higher this week on above average volume after breaking down the previous week. This is where price broke down from. Now, this is the second to last week before the end of financial year. Just keep in mind the market won't always trade as expected in the couple of weeks prior to end of financial year. So the market didn't respond particularly positively this week on above average volume. That suggests that selling pressure was coming in. So the most you can hope for probably is for price to continue sideways next week. There may be some threats to this level, which is 6,400. We'll just have to see how the market negotiates its way through. I'm not really expecting the market to break down strongly, but if it was to do so, you've got this congestion zone here, which will offer considerable support you'd expect. The lows of the range are catching the highs, so price is just dangling there at the moment in no man's land to some extent. I would expect considerable support through here if the market required it. If not, the market may pop up just to the highs within this range next week. We'll just have to wait and see. You might find price threatens next week early, and then end of financial year is Thursday, I think, so on Friday the market may pop up. We'll just have to wait and see. This is the mid caps. And once again you can see a modest recovery this week on above average volume. Spread narrowed compared to the previous bar. It was only a modest response at best. Selling pressure continued to come in, which kept the spread narrowed. The lows of the range haven't been threatened particularly, so I would really expect price to continue sideways as the most probable outcome next week. The small ordinaries, they've been under a bit of pressure, and once again there was a recovery this week, but spread was narrow on above average volume and it reduced over the previous bar, so it was a modest response at best. The market continued to face selling pressure, which made it difficult. The market hasn't really threatened the lows of the range, so once again I'd expect the market to continue sideways as the highest probability next week. It may threaten the lows, but I'm not expecting a serious breakdown at this point in time. The financials have been under pressure for a little while now. Their margins are likely to be under pressure. Price responded positively this week after breaking down the previous week. Like the other markets, we had an inside bar this week. Volume wasn't quite as high as the other markets, so selling pressure may have reduced a bit and spread was a little wider, but overall it wasn't a strong response. There's been some buying off these lows, I'd suggest, but it's not really strong buying. This market's more likely to go sideways. I don't expect a challenge to the highs of this range next week, or if it was, it would only be late next week. I expect margins to be under pressure for a little while here, and that will cause the price action to be subdued to some extent. This is the miners. Price has been under pressure here as well, and price broke down to some extent this week. It was high volume, prices moved below the lows of the range and below the lows of the larger range. You'll find that support will be relatively strong down here if price comes all the way down. I don't think it quite reached there this week. So price is just dangling there. There is some chance it could recover later next week, but if not, it may come into this range, and I expect we'll find some stronger support down here. This is the ASX gold market. It's tried to remain resilient for a number of weeks, similar to the gold price futures. You can see that price responded positively here. It did dip below, but then it recovered again here. And this week, it's actually broken down below these lows and held on to the lows of this bar. It's trying to be resilient. It's finding a little pressure. Volume was again well above average. It recovered last week and it's dipped below these lows this week and just held on. We'll see how it goes. The energy market. You see price has been very strong up till this point. Found some selling pressure here. And moved lower. Here's the lows of the range. Prices moved below it this week. Now just notice that spread narrowed considerably this week. It's perhaps half the spread of the previous bar, yet volume was higher. So buying support has come in this week. Now that might allow this market to have an attempt to reverse next week or test for supply next week. There's another line you could put through here at the lows of that bar, and again here. This is probably the key level. If that was to break, things would be getting serious to the downside. But there's no doubt that some buying supports come in this week with the spread narrowing considerably and volume increasing. So as the buyers stepped up, that stopped price stretching lower and made the spread narrower when you consider it against the previous bar, which had less volume but much wider spread. So buying support has emerged this week. Just have to see how selling pressure goes. If selling pressure continues, you may get a test for supply. If selling pressure is now low and whoever was going to sell has done so last week and been bought, you might find price bounces higher next week and you get a bar like that. Healthcare caught a bid this week after being under pressure for a few weeks through here, where I expect some sellers emerged. There's the lows of the range, or else you could put it there, but either way it's about 40,000 on this chart. And you can see price dipped well below last week and down to last gasp support, and then prices responded higher this week, but it hasn't responded or been strong enough to challenge these lows here. Now you might find price test for supply in response next week, something like that. And then if trading conditions were favourable, there might be a challenge higher next week. It would be a poor response, obviously, to see this level broken to the downside or this level threatened a second time. And finally, the industrials. The industrials were trading along quite well, but supply was drawn out when the market became under pressure. Prices pushed back down to these lows of the range. Here's last gasp. And there's been a response this week on above average volume, so it's not too bad, but you can see spread was much narrower than the previous bar, so it's not been a strong response. It's probably just traded alongside what's happened in the overall market and moved a little higher without really threatening at all to push higher with any strength. Now I imagine many of these markets will see some different trading after the end of financial year has passed. So take some of the trading with a grain of salt next week. It may prove to be legitimate, there's no doubt, but previous experience tells me that we'll see some sort of change in the trading sentiment after financial year ends at the end of this coming week. Thank you for your time. Hopefully that was informative. See ya.